The job.
Carol Jones with New Mexico Investment Advisors joins us today. Thanks for being here.
You're welcome.
So obviously a lot of talk. The Dow reached over the 10,000 mark for the first time since we basically had this meltdown. A lot of people asking, are we out of the woods? You know, what are you seeing? This is obviously a good sign. I would take it.
Well, it's interesting. And first of all, I want to thank you for having me here with good news.
Yeah.
Usually when you have me here, the market is melting down, and I have to come in and explain to people that the world's probably not going to end. Interestingly enough, with the market moving back up over 10,000 for the first time in almost exactly a year, I'm still having to explain to people that I don't think the world's going to end. People really don't trust it. And so there's still a lot of concern out there about what the market's going to do. Analysts really have two schools of thought. Half of them are looking for what has become called the new normal, which means that the economy will be slow for quite a while, that it'll be very difficult to make money. Protecting assets is really the thing to do. And then there are a lot of analysts who think that things are actually better than we think, that earnings will be very forthcoming, and that the market will come back, and that the world will not end after all.
So a lot of people were panicking. A lot of people stopped contributing to their 401k, started putting money in their savings, trying to figure out what to do. Obviously, those who stayed in it are now benefiting because they did stay in it. But, I mean, is it a time where you finally would tell people, yes, your money will be safe there at this point, which you've been saying all along, you know, the long haul, but people are still real nervous about it.
They are real nervous. And first of all, there's no guarantees in the market.
Right.
And so you don't ever want to put money in the market that is safe money and that you want to have guarantees for. But nonetheless, it's really the best place to have growth. I'm of the opinion that things are not as bad as they seem. After the close today, we had some more earnings reports which were quite good. We had Google and IBM, two technology bellwethers, both of which had upside surprise earnings. And that's what we're seeing now. So I think that people need to begin to come out of hiding and put a little money back into the market, even the ones that got out and are scared.
There's also been talk about, you know, last time we rose far too quickly. Of course we were going to have this meltdown that we had. I mean, is that always going to happen again at some point eventually or not? Now that we've reached this point again?
I've done this a long time, and I will say that the meltdown we had last year was different to the extent that I've never seen so much panic. We actually had a worldwide financial panic. That made it a little different. And so what people are forgetting is that even though we came back quite a bit, we also went down far too much. So I think this is more of a normalized market. People need to go back to the basics, buy stocks in companies that are making money, have dividends, are well managed, and that's what we call investing for the long run. That doesn't mean staying there when the sky is falling.
Right.
You always have to look over your shoulder, but I think there certainly are opportunities.
Okay, thanks, Carol, for joining us as always.
You're very welcome.
We appreciate it.